now we need to figure out what type of loans we should be looking for, right? So like, let's get into that, because there's different programs for different people who need different types of assistance. Let's get into that a little bit.
Yeah, man. So there's tons of loans out there, right? So you have the traditional loans, you know, FHA, conventional, VA loans, you know, you have NACA. I know someone mentioned out there, but let's do a brief overview, right? FHA, minimum 580 credit score. You can buy 1 to 4 family properties. All properties must be owner occupied for at least 1 year, okay? Again, 1 to 4 family owner occupied properties. You can even buy with FHA a mixed use property, right? So now a mixed use property is basically a commercial building. Now we have a lot of these mixed use properties here in New York where you might have a bodega on the bottom and 3 apartments on the top, right? That's a mixed use property. So FHA will allow a home buyer to buy this mixed use property as long as the residential square footage is at least 51% and the likeness of the building is more residential in stature. FHA will allow you to buy a commercial property. So that's perfect. Let's just say we have any business owners here in the chat right now watching this live or going to watch this on a replay. If you have a business that needs a brick and mortar, right, you can go with FHA loan, buy this mixed use, live upstairs, have your business downstairs, and put as little as 3.5% down for a mixed use property. That is a home run. FHA also allows you to get rehab money with the 203K program, where you can get 100% of your rehab costs as well, right? So FHA is a terrific program. You can go up to, like I said, 4 families. We're putting down 3.5%. Now, some of the cons about FHA is obviously the PMI, right? The PMI is if you put down less than 10%, it's for the life of the loan. And if you put down 10% or more, the PMI automatically goes away year 11, right? So that, I would say that would probably be one of the biggest cons with FHA. But despite what everybody would believe, FHA loans do close really quickly, right? A lot of people out there think, oh, if you get an FHA loan, it's going to take forever and you got bad credit, you don't really qualify. No, that's not the case. FHA is a great program. It gives you a higher approval amount sometimes than conventional mortgages because the debt to income ratio requirement is higher than conventional. Now, so with conventional,
let's do this though. Let's before you go on, let's really take our time. Let's take our time because I want to make sure everybody understands. So even terms like PMI, somebody might not understand what that is, right? Primary mortgage insurance. And even like, okay, the FHA loan, somebody asks like, is this first time home buyers? Like you can use that for your first time home, right? And it allows you to put 3.5% down as opposed to a traditional 20% down, but you have to pay the PMI until you reach 20%, right?
No. So to answer the question about the first-time home buyer, FHA is not just for first-time home buyers, right?
No, I know it's not just for first-time home buyers, but you can use it if you're buying your first-time home, right?
Correct. You can use it if you're buying your first home, but most people think if I own a home, I can't do FHA, which is not the case. You can do FHA as long as it's going to be your primary residence. Now, the PMI, the private mortgage insurance, or an FHA is called mortgage insurance premium. That only goes away if you put down 10% or more. And it goes away year 11. With a conventional mortgage, if you obviously put down 20% up front, then you have no PMI. But if you put down less than 20% on a conventional mortgage, then that PMI will go away once you can request for it to go away once you get about 20% equity in the home, right? So it's a little bit different than FHA. You don't have to wait that long of a time frame to get the PMI removed. The conventional loan, you can get that PMI removed much faster. And there was something else you said in there, Rashad. What else did you say? I just had a brain freeze.
No, I think that was it. Just wanted to just make sure that they was just understanding everything. But yeah, I think that was it. But somebody asked the question too, though, from the chat. Somebody in the chat, Trenton Stewart, he said, "What if he's 1099 and not W-2?"
Good question. Great question. So if you are 1099, you are considered self-employed, Trent. So it's very important. Remember, 2-year work history with all of these traditional loans, right? So if you are 1099, you need to be 1099 for 2 years. But the most important thing, Trent, and anyone else who is self-employed or 1099, your tax returns need to line up appropriately. So let's just say you get $100,000 on your 1099. If you write off 90,000 and tell Uncle Sam that I only made 10,000, you paying income taxes on 10,000, that 10,000 is the money that we're going to use to qualify you. And let's just be real, 10,000 ain't enough to buy no home, right? So if you know you are self-employed and you write off a lot, this is why it's extremely important in the beginning to have a great lender and start mortgage planning, right? Everybody type in chat mortgage planning, especially my self-employed people. You have to plan for your mortgage. You just can't walk out and say, hey, I'm going to buy a house today, and you don't know what your finances is looking like. So having a great lender and also having a great accountant or CPA who understands real estate to guide you, to let you know, okay, if you pay less taxes this year, if you write off less, you're going to pay X, Y, and Z amount of income taxes. Is it worth it for you to buy a house and use this income? Or is it better for you just to put 20% down and go with a non-traditional loan where we don't need tax returns, right? So you have to look at both sides of the fence to see what's most beneficial to you as that entrepreneur and trying to get into real estate.
Somebody else asks, can you have more than one FHA at a time?
If you meet the 100-mile rule, right? So if you buy a FHA, to say a duplex in Brooklyn, right? And then you're moving to Atlanta and you want to use FHA again to buy another duplex in Atlanta, and you can prove that you are moving down there as work related, then yes, because it's old Brooklyn and Atlanta is well over 100 miles away. So that is really one of the only circumstances that I've seen get approved when you are looking to have multiple FHA loans. But if you're looking to house hack, right, prior to conventional loans changing the guidelines about a year ago, the strategy was buy the 4-family, use FHA, refinance into a conventional, then go into a 3-family and then use FHA again. But now that conventional allows 5% down payment on multifamilies for your primary residence, now you don't really need to use FHA more than one time. You can now go the first property, FHA, then the second property, which could be the 3-unit, now you can use conventional and put 5% down because it's now your primary residence, right? So the strategy for the 4-3-2-1 changed a little bit with that guideline, which is a home run for everybody looking to house hack. But no, you don't need to have 2 FHA loans at the same time to continue to grow your real estate portfolio using the house hacking strategy.